John, just on that, this does not necessarily mean then a windfall and record profits for shippers because, correct me if I'm wrong, they are just getting crushed on the margins, just like everyone else.
No, I would not use the word windfall, but the reality is our freight rates, excluding fuel, meaning netting the fuel off, are higher. And we've actually seen them go up about 30% overall for the month of March so far. The large ships, the Cape-size vessels, all the way down to the minor bulk vessels, which would typically be carrying the cargoes out of the Black Sea area. And as I said before, that's a function of greater ton mile. We've seen because of it's almost a scramble to bring more coal and petcoke into Europe because of the shortages, and we're also seeing grain shipped out of the U.S. out of stored inventories going all around the world right now because of the lack of any grains.
That's right, and we were talking to a previous guest on this program who was talking about how European power generators are making increased inquiries for Indonesian and Australian coal. Can I bring in the China factor here, John? Welcome your view on this. It's imposed lockdowns on major manufacturing hubs, some ports as well. Is that going to give rise to another round of supply chain dislocations? And what's the potential spillover and complicating factor for your industry?
Yeah, I certainly, unfortunately, think it's going to slow things down from a supply standpoint. I might equate it slightly to what we saw in 2020, where there were lockdowns, and so we saw a slower period for a short period of time. It was really no more than a month or two, and then you actually saw fairly large stimulus and pickup in China, particularly in the steel industry. My view is you could very easily see that same situation again as we get into the latter part of the second quarter and for the rest of the year. I did hear what one of your guests was talking about before this from ING. China has obviously put the 5.5% GDP growth target out there. Most likely they're going to protect to at least 5%, which means infrastructure spending and steel production continuing to recover.